Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me to the end of the week presentation with the Australian dollar still remaining to a bearish sentiment. Now, the Australian bears have continued to keep their paws on the market for the sixth straight day. And since the market posted a shooting star, got confirmation from the outside range day to the bear case, rejection from that 60-day simple moving average, the market has plummeted and now very much close to its objective of 75 cents. At these levels, I'm not a bear. Although the ADX is trending to a bear case, the RSI is extremely oversold. Therefore, attempts towards the downside at 75.45 or even towards 74.85 to 75 cents could easily be rejected. So trading from a short side, just be a little bit cautious because we can easily get a rally up towards 76 cents. Now that being said though, we did get a rally overnight to 75.88 before the bulls slipped and the market turned back to the downside. Nevertheless, the low so far has been 75.44 this morning and it still poses a slight threat, but as I say, be aware if you're trading from the short side in case we get a rebound. Well, this pattern for the euro has been pretty much locked for most of this year in a 121.5 to a 125.5 range. Now that we've broken out of this range, finally from the challenge to the downside of 121.80, I do expect to see further weakness. Clearly supported as well from the US dollar rally after it's broken the broad trend of 90.40. With 93 objective for the DXY index, I expect to see further weakness for the euro. Overnight, as widely expected, the ECB, European Central Bank, kept interest rates unchanged. However, President Mario Draghi appeared to have played down some worries over the recent softness in the Eurozone economy, leaving the door open to ending lavish bond purchases by the close of this year. With the immediate target for the intraday holding at 120.60 for euro, I do expect to see a weakness to 119, and as I say, with the objective of 118. The figure on the broader sense, resistance seen at 121.65 to 122.45. What it would seem after quite an extensive rally from the dollar yen since around 104.5, the market is taking a slight breather. And well, due to as well, because of the overbought condition, I do expect to see some pullback in the day with the base holding around 108.85. And then from there could actually eventually see this take out to the top side. Above 109.70, I do expect to see stop loss buying. The market taking back its short position as the last squeeze to the rally that could end up towards around the 110 and 111 mark. The pound overnight did attempt to rally, but the bulls slipped again after recording a high of 139.97. From the retreat, still sees the target of 138 in the short term. Do be a little bit on your guard as the market is a little bit oversold, and we do have the Bank of England Mark Carney speaking this evening. Although his comments from last Friday were dovish, we could still see a slightly dovish Carney, but be on your guard because I do expect to see the market eventually start looking at a rate hike next month. This could put a bit of a momentum back into the pound and could see a rebound. But failing to do so, and a break of 138.5 could expose a move to 135. But we do need to see a little bit of a rebound, but from the overnight rejection does give some concern to the bull case. The gold has slipped further as geopolitical tension starts to fade in the distance, and the yellow precious metal could now look towards the region of the bullish foundations, but still locked in this range for the year of 1,300 to 1,365. The bearishness may look towards 15 for immediate target and down towards 12 where the recent rejection was, but we are now closed under 18, which does give some concern that we could see further weakness. Resistance on the day, 21 to 26. The silver outlook a little bit better on the case of holding up since the sell-off, but nevertheless the support still comes in at 45. Underneath there is the bullish foundations of $16.1520. At present, there's a little bit of divergence from the RSI, so we could see in the short term a recovery back towards the region of 60. And rounding off with oil, I'm not overly bullish. As you can see from the technical implications, my call is still towards $66 a barrel, with any advances still contained by the resistance of 70.72. So that wraps up for today. Thank you very much for joining me. I hope you have a wonderful day and a great start to the new weekend.